Welcome all. Thank you so much for joining. I'm going to give folks a couple of minutes as we let attendees in, just to fill into the room. And I'm excited for today's conversation. So just give us a couple more minutes or 1 minute or so to let people filter in. Great. It looks like we are filling up. So, and it looks like we have a sizable group. So, I'm going to get us started. So today I'm excited that we have panelists from with a broad range of perspectives, really bringing together research side of things with the industry. And today we'll be focused on the role that real estate plays when it comes to supporting human capital and how we can measure relevant outcomes with built environment interventions. So just to quickly introduce myself, I'm Sara Karerat. I'm the Director of Applied Research with the Center for Active Design. I'm going to be moderating today's session. And I just want to start off with a couple of housekeeping notes. Please feel free to submit questions throughout today's session, and we will do our best to get to as many as possible during our panel discussion, which will follow today's presentations. Also, if you encounter any technical difficulties, please also submit those questions via the Q&A box, and our team will do our best to resolve. We will be following up after today's session with links to some of the key reports and studies that we mentioned during the session. So look out for that in your email. I want to start today's session by briefly introducing our panelists. So to start, Joanna Frank is with us today, and she's the president and CEO of the Center for Active Design, which is, and also Active Design Advisors, Inc. The Center for Active Design is the operator of Fitwell, which is the leading healthy building certification system, originally developed by the U.S. Centers for Disease Control and Prevention, and really focused and committed to building health for all. She's joined by Adele Houghton, who is the president of Biositu, and who is also pursuing her doctorate in public health at the Harvard T.H. Chan School of Public Health, with the goal of really building a community of practice within the fields of design, development, and facility management, dedicated to using green and healthy building principles as a means towards accelerating action on climate change and chronic disease reduction. And finally, I'm pleased to introduce Harry Etra, the CEO and founder of HXE Partners, which is committed to helping clients achieve their sustainability and environmental, social, and governance goals. So after quickly covering the learning objectives for today's session, Joanna will discuss what we mean when we talk about healthy buildings and how Fitwell's benchmarking tools can help inform strategic investments. She'll then turn it over to Adele, who will present her co-benefit design approach and how it relates to accelerating ESG uptake in commercial real estate. And finally, she'll turn it over to Harry, who will discuss ESG in the real estate industry and the role health plays within this landscape. We'll then all come back together for a panel discussion during which we will answer the questions that have come in during the session, as well as a few of our own. So just to quickly cover off on the learning objectives of today's session and what we hope you walk away with. Following the session, you'll be able to discuss how benchmarking can be leveraged for data analysis purposes and inform strategic decisions. Joanna will also discuss key performance indicators that can be leveraged to demonstrate the impact of health interventions. Adele will help you identify process metrics that can help inform evaluation efforts, and Harry will guide you through the current state of ESG metrics within the real estate sector. So lots of rich findings that we hope help guide and inform your work moving forward. And with that, I'm excited to turn it over to Joanna Frank.
Thank you so much, Sara, and thank you everyone for joining today. I'm going to be really looking at four main areas. The first is, how do we define a healthy building? I think it bears repeating how we define a healthy building, just to ensure we're all on the same page. The next is looking at a new report that we have that was published just last week, which is looking at how do we quantify the value of promoting occupant health to ensure that we really are building momentum and meeting the demand for healthy buildings in every way possible. we're doing that by looking at gap analysis with benchmarking, and we'll talk about how Fitwel is supporting benchmarking through the online portal that is Fitwel. And then also, what are the takeaways of this report and the findings that we just published last week? So I'm going to start with defining a healthy building. So when we're talking about a healthy building, we're really looking at buildings that have three key characteristics. The first is that the building is directly responding to the needs of the occupants of the building. The second is that the building is using or strategies are being used to enhance that building that are based in the evidence base. So you're looking at design and operational strategies that are based on the global evidence base coming out of public health. And the third characteristic is that you are measuring outcomes and that you are using those outcomes to further inform operational practice, design strategies, and feed the knowledge base of really what it means to be a healthy building. And it's really those outcomes that we are looking at today. And this is the area that has been the least defined actually in our work. We obviously have a massive evidence base behind Fitwel from the global public health community that really defines those characteristics of a healthy building. The design of the building, access to daylight, do you have access to green space? What is the indoor air quality? All of those kind of elements that we think of as a healthy building are supported by the evidence base. But how do we measure outcomes? How do we ensure that people are actually benefiting from the buildings that we are creating? Next slide. So I am delighted to say that Sara and her team partnered with Quadrille to actually look at how do we define those outcomes? How do we quantify outcomes? How do we look at the correlation between promoting the health of occupants and other outcomes which are valued in the real estate sector? So this study is groundbreaking. It's the first time that we can really talk about this with data behind what is the correlation between promoting the health of occupants and tenant satisfaction and something called net promoter score. So for those of you not familiar with a net promoter score, it is the willingness of occupants of the building to actually tell their friends, tell their peers that they would recommend this building. And it's a key indicator of tenant satisfaction. So we worked with Quadrille. They benchmarked 60 of their properties, which included multifamily as well as commercial properties, and looked at the tenant satisfaction surveys that they had also have for all of those properties, looked at those two data sets to understand where are the correlations between when we have a higher benchmark, when we are doing more to promote occupant health, do you see that reflected in tenant satisfaction? And we can now say, yes. The answer is yes, you do. So this was significant in and of itself, but we also had a lot of other learnings, which I'll talk about as the key findings behind this study. One of the things that I'm especially excited to share with you about the study was that the surveys that were done around tenant satisfaction were done completely independent of Fitwel or anything to do with health. So people were being asked about all sorts of kind of ways that they're thinking about their buildings, but no reference was made to health. So they weren't told this is a Fitwel building or this building has all of these different strategies that have been put in place to optimize your health. And so what this really shows us is that people perceive the difference. People feel the difference when a building has been designed and operated to optimize their health, and they don't need to be told this is a healthy building. And that is fantastic news because it supports the hypothesis that we had always said that it's really in the doing it that matters, not in the saying you're doing it. So really responding to the demands of your occupants with those evidence-based strategies is where you're going to derive the value when it's in relation to tenant satisfaction. So that's an exciting insight that was gleaned from this report and from this research that was done. So this is a little bit about kind of what we looked at. So we looked at those 60 buildings with Quadrille. They used the Fitwel platform, the tech platform, to actually benchmark those properties. So many of you are familiar with Fitwel as a certification platform, but on the way to certifying, we actually created a benchmarking tool. So you can benchmark your properties without certifying properties. And this allows you to really use the benchmarking to look at your whole portfolio and understand what are the design strategies, what are the operational strategies you have in place per asset, and then at a portfolio level. So a lot of understanding can be derived from benchmarking. This is also a project management tool. We are told by many in the real estate industry that they actually don't have these data sets. So how can you create a data set that really describes each of your assets in relation to how it is promoting occupant health? So this in and of itself is kind of a revelation that folks don't have consistent metrics even to define the baseline of where their buildings are today. So Fitwel is obviously looking at location, it's looking at the operational strategies, the amenities, as well as the designs of your existing and new properties. So all of that is often new news and a new data set to add to our understanding, which can obviously then be correlated with existing data sets around financial performance, around tenant satisfaction, and that's where we start to see these correlations. So we've done this with QuadReal. We would really love to expand this research, expand this understanding industry-wide, so we can obviously have a larger amount of data and further reinforce these findings or find other findings. So that's very important, just to expand the use of benchmarking. The other thing that benchmarking does is it actually gives you a gap analysis per asset. So when you benchmark that asset, the system itself, the Fitwel system, generates a gap analysis, which we call the areas of opportunity, and it tells you per asset which strategies you are currently not able to meet in the order of the greatest impact. And that's really important, right? These are not just checklists. These are real kind of roadmaps of how do I improve the occupant health, and therefore now we can say are likely to improve the levels of satisfaction per asset with a really specific look at what do I need to do for this particular asset, right? This is not about a one size fits all. This is really a per asset. What are the opportunities of this building, of this asset to improve the health of the occupants and therefore also drive tenant satisfaction? So a lot of information can be gleaned just by benchmarking using the Fitwel platform. So we're excited to be able to promote that to all of you. We've also created a new tool which allows for great efficiency, where you can actually bulk upload 10 or more projects at a time and create those accounts in a way that's really efficient for your time. Our platform actually creates those accounts for you. So we're excited to support all of you using the benchmark tool across industry-wide, so that everybody has a baseline understanding of how their properties are performing against health, and therefore how they can continuously improve those properties in order to drive tenant satisfaction. So I'll just finish with some of the key findings of this initial research that we did with QuadReal, because they are significant. The first is just the big headline, and that is the higher your Fitwel score, the higher your net promoter score. So therefore, the higher your tenant satisfaction. So that in and of itself is newsworthy. So what that means is the more that you do to promote occupant health, the more people respond to that positively and increase their tenant satisfaction and their likelihood to promote your building to their peers. So that's great. But we did find other things also as we looked further into the research. We found that location drives residential rent. This is not news in real estate, right? Location, location, location. We all know from real estate that location is a real driver of value. What I found really interesting is that real estate doesn't have a consistent metric that they use in order to define the locational attributes of their properties. So using Fitwel to look at not just what is the walk score, but also what is my access to transit, what's my access to open space, and then on the negative side, what's the proximity to noxious sources of pollutants, or those kind of more negative attributes that you might find around the location, because all of that together can be used to inform value when it comes to location. The next two are really interesting because I think they're not what we would have expected. And that is that the operational strategies are the strategies that had the greatest impact on the net promoter score. I think if you had asked us ahead of time, we may have said maybe it's design that has the greatest impact on folks' perception of health or folks' satisfaction when it comes to the building, but that is actually not the case. It is the operational strategies, which is really good news because every building, no matter the age, the location, can optimize their operational strategies. So that's something as basic as integrated pest management strategies, that's your indoor air quality operational strategies, and lastly, your food strategies. So this is the other revelation, and that is that food and having those strategies around promoting access to healthy food, whether they're pricing strategies, your vending machines, community gardens, no matter what those strategies are, around there's a long list of health promoting strategies on Fitwel, they across all asset types have the greatest impact on net promoter score and tenant satisfaction. And what is particularly insightful about that is that these are the least used strategies in the Fitwel platform in all asset classes, in all regions. So here we see a real opportunity for the real estate industry to step up, look at those strategies, look at them as they relate to tenant satisfaction and therefore value of their real estate. So all of this is around how do we both mitigate the risk to our real estate portfolios and how do we derive value and increase our return on investment. And we are looking at how do you do that by really optimizing your buildings, your sites, your projects for people and valuing the human capital. So with that, I'm going to turn it over to Adele. Thank you so much.
Great. Thanks so much, Joanna. That was really interesting. And if you haven't read the report, it's fascinating. Really glad to have that new information available. I would like to expand the conversation beyond this new and exciting research around how health promoting design can both contribute to occupant health and bring value to real estate investors, and start thinking about some of those strategies that Joanna just talked about towards the end, and how the surrounding neighborhood, if we start thinking about that as part of the question about metrics and prioritization and design strategies, that if we were to measure the way that a design actually benefits its surrounding neighborhood, that could also generate new value streams for the property. And so you can move on to the next slide. So I'd like to start by thinking about our current approach to green and healthy building design. And I say this as an architect and somebody who's worked in green building for almost 20 years. Most project teams consider opportunities on the site that could be used to provide amenities like on-site solar, gardens, walking trails. They look inside their building to see how they can orient the building to maximize daylight and views. They consider things like healthy food, etc. But the question about whether or not those strategies are going to be prioritized in the final design depends usually on the programmatic goals of the owner and whether they could be justified as part of the development budget. And the way that we generally tend to do that is looking at individual strategies and seeing whether or not the individual expenditure for that strategy can result in some sort of income stream or value at the other end that could offset the cost. And then that would make it financially viable. And so what I'd like to suggest is maybe a way of expanding our lens when we have that kind of conversation. You can move to the next slide. So if we were to think about the exact same site, and I'd encourage you just to kind of imagine a project that you're working on right now, where you're doing a site assessment right now, considering what the opportunities are on and around your site. Generally, you're looking at things like environmental questions and maybe economic development. But if we were to look at it through the lens of a public health practitioner who wants to enhance community health outcomes, that person would probably want to know who is actually living and working and playing on and around this property, and what kinds of health outcomes are they currently experiencing or that they're at risk of experiencing. So if we want to think of an example, if the neighborhood has a large cluster of, say, elderly population or children, or say you're working on a school, so inside of it you're going to have a lot of small children, those two kind of people at the two extremes of the life cycle are, or the life course, are more vulnerable to experiencing poor health outcomes. And I'm just going to use heat as an example. So during a heat wave, both the elderly and children, they have a harder time, their bodies have a harder time thermoregulating, and they also are more likely to depend on caregivers. So if the power goes out and they're in a location where there are no operable windows, there's no power, and it's getting really hot, they may not have safe opportunities for leaving that location and going to a cooling center. And so a public health practitioner would want to think about, are there groups of people like that in this neighborhood? And is this a neighborhood that tends to have experience power outages during extreme heat events? They would also look at something that we call the social determinants of health. And so these are questions around racial and ethnic discrimination, around access to education and jobs, aspects of our society that can create inequities that lead to poor health outcomes for certain groups. And so if you see that there's a cluster of population that have warning signs around social determinants of health, as a public health practitioner, again, you would want to think about, are there ways that we could protect those populations? You can move to the next one. And so what I've just provided for you is kind of two different viewpoints of looking at the exact same geographic location. And what's so interesting is that many times those two different viewpoints are talked about as though they're totally different locations. There appears to be little overlap between the two. But in fact, we know that that's not the case. And Fitwell's been one of the leaders in identifying and sort of collecting evidence demonstrating that there is a strong connection between the built environment and health outcomes and certain groups of people that can be vulnerable to certain health issues. And so what I'd like to kind of encourage us all to think about is when we design a new building, or if we renovate a building, or we start thinking about changing our operations of an existing facility, what we do is going to have a ripple effect on the surrounding environment. It's going to change environmental exposure. It could increase or reduce air pollution, for example. It could have an effect on the urban heat island. It could have an effect on how flooding is moving through a neighborhood. It can also have a ripple effect on economic opportunity. What you put into that building can generate and cause additional economic activity, or it could actually shut it down depending on what kind of project it is. And it affects social equity. So we know that the way the built environment is set up, that there are, particularly in urban areas, ways that the land use has actually excluded and islanded certain communities, particularly African-American communities, that has made it very difficult for them to access economic opportunities in other parts of the city. So when you're designing a project, particularly in an urban area, you have an opportunity to have an effect on that kind of equity. And so you can move on to the next slide. And so the rest of the time, I'm going to talk with you about one particular approach to combining this neighborhood specific information that you would generally gather through a public health method like health situation analysis or health impact assessment. And you can use that information, combining people in place, to lead to new opportunities for value creation. And so if you want to move to the next slide. This diagram comes from an article that I wrote last year when a lot of landlords were dedicating funding to retrofitting their buildings so that they were safe for re-entry during the COVID pandemic. And what the article suggests is that if we use a method called co-benefit design, co-benefit as a method really kind of comes out of the environmental movement. It's used a lot in EPA for risk assessments. But what it does is it basically helps you look at strategies that are, on the left-hand side of the diagram and link them up to your proposed outcomes, which are on the right-hand side of the diagram, through a series of what are called co-impact pathways. And as you start clustering and finding opportunities for a set of strategies to kind of make their way through a co-impact pathway, and have a lot of benefit for multiple different outcomes, that's how you prioritize, okay, this is the group of strategies that we would want to use. And so I just want to create one example for you before I pass the baton on to Harry. This just kind of continuing with the idea of extreme heat as an example. And this is one example that's in the article, but there are lots of other examples in there as well. You're welcome to read it and learn more about how to actually perform this approach. But so if you were working on a project, you identify it is located in an urban heat island, and that there are people in the community around the project who are at higher risk of extreme heat, and maybe also your future occupants might be as well. Then a co-benefit approach would think about, not just your typical urban heat island response from a rating system, putting in maybe a green roof, lots of vegetation, all of those things are important, but it would also encourage you to really maximize your net zero approach to design, so that you're addressing both mitigation, reducing greenhouse gas emissions, and also slowing the speed at which that building is going to increase interior temperatures to the point where they become dangerous to the people inside the building. Another design strategy that tends, sadly, not to be used that often, particularly in commercial buildings, but is extremely important, and I hope we start using it more often, is operable windows. So if you take a co-benefit approach to this, then you're thinking about, particularly during COVID, opening the window can reduce the concentration of the SARS-CoV-2 virus by 50%, because it's flushing out the room, right? So that's one co-benefit. It also, again, makes it safer to be in that building if the power goes out, and it reduces the energy use of the building if the operable windows are incorporated into your MEP design. So those are just a few examples. I'd say the last one, particularly related to equity, is this idea that more and more projects and buildings are thinking about of creating cooling centers within their buildings and making those cooling centers publicly available, particularly if you're in a neighborhood where you've got population that might not have enough access to air conditioning during the heat of the summer. And that by combining a solar array with a battery, maybe even that could be an anchor for some sort of urban solar farm, that would be another opportunity to both provide an amenity to the neighborhood that could improve questions around equity. It could also become a new value stream for the project. So these are the kinds of ideas that might expand opportunities and also value streams flowing into the project, if you were to think about how one strategy links to other strategies through a co-impact pathway, and then how it impacts those outcomes. So with that, I'll pass it on to Harry.
Great, and thanks so much. Really appreciate the opportunity to be on this webinar with such great fellow panelists. My name's Harry Etra. I lead the team at HXE Partners. During this part of the conversation, really going to talk about what is ESG, environmental, social, and governance, going beyond the acronym. What do the detailed metrics actually mean across those three different pillars, how ESG affects the real estate industry, and throughout all of this, how health is accounted for when it comes to ESG, and the broader topic of human capital management, really the people within the built environment and the impact that the spaces in which they occupy can have. So getting started, really want to make sure we're all aligned in terms of the definition of what is ESG. And the way that we think about this is it's really, industry and company specific, and a way to holistically evaluate how a company manages relevant risks and opportunities from internal and external environmental, social, and governance factors. So again, across these different pillars, health cuts through in many different ways, but really honing in on what's often talked about around climate risk, increased focus on biodiversity, resource conservation on the environmental pillar. On the social side, human capital management, really how do you think about the people at your company that are occupying real estate, continued focus and sort of much needed on diversity, equity, and inclusion, the role of health and safety, community impact, and then really on the governance side, the oversight of environmental and social topics. What is the composition of your leadership, and how are they positioned to manage and navigate, relevant risks and opportunities to your business across these different pillars? Going further, a lot of the conversation, is increasingly about, as it should be, what is the financial impact of what may be considered non-financial levers or pillars. So looking at some of the definitions we've talked about before around what falls in the environmental, social, and governance topics, and what are the relevant metrics across each of these pillars. They can have, in real estate and other sectors for large occupiers as well, clear financial impacts related to revenue growth, operational efficiency, brand value, cost of capital, and risk management. How do you actually quantify, and where there's still gaps in drawing that direct connection between these metrics and the long-term financial impacts? And again, I think a lot of the data and studies that Joanna and Adele presented on earlier, more clearly draw that line and communicate, these are impactful. This does have a connection to your bottom line, and this is something that you need to be managing. Looking at the history of the investor lens of ESG, if you look at the table in the middle around the United Nations Principle for Responsible Investment, one of the leading programs in which institutional investors commit to integrating and aligning with ESG into their investment strategies, you can see a significant increase in signatories to the PRI, which indicates investors are looking to evaluate relevant financial metrics when it comes to ESG. And across those pillars where we've talked about human capital management, we've talked about environmental impact, we've talked about governance and oversight of these topics, this is really important to investors, and large capital players are making it clear that they value these commitments. And if you go further, on the next slide, you can see, the history of this from a regulatory perspective. So ESG, historically has been voluntary reporting. There's been a lot of work done by the Securities and Exchange Commission, the SEC, to put out proposed rules, essentially mandating disclosures of relevant ESG information in mainstream financial filings. So sort of moving beyond what has been voluntary, this is going to be required likely in the coming years if it's approved, and more currently focused on environmental metrics around greenhouse gas emissions. But we predict that there'll be a continued focus on human capital management, comparability, health and safety as metrics that will be reported on in the coming years, or required to report on in the coming years. If you go to the next slide, within the real estate industry, so looking at real estate investment trusts, REITs, you can see this similar trend of reporting on ESG year over year. This is the top 100 REITs. You can see almost everybody is doing some form of ESG disclosure and describing their strategy. And on the social or human capital side, increasingly reporting on tenant engagement, thinking about how important this is to have a community impact, diversity as well as a key priority for these REITs. You're seeing, ESG filter through into the strategy of REITs that want to attract capital. And if you go to the next slide, you can see even further, looking at publicly held or privately owned real estate owners, the trends that they're disclosing this information to their investors, and programs like Fitwell, kind of the work that's being done at the asset level, is rolled up in terms of how real estate companies are being compared to their peers and what's impactful. And then looking at some of the recent data, and per the study mentioned earlier, you're seeing investors say that there's going to be an increased demand for healthy buildings over the next 1 to 2 years. Really clear consensus there, and sort of the momentum that now is the time to build off of what you've been doing. This is really important to a key stakeholder, which is the institutional investor. Jumping to the next slide, I just kind of want to close here on kind of the metrics piece. So, there's always been this question of, okay, can you measure the social impact of real estate, the human capital impact of real estate in the same way that we've historically focused on the environmental impact and greenhouse gas emissions, energy, water, and waste. The importance of health and safety as a key metric to be able to manage and compare what you're doing relative to other assets. On the human capital management side, how you can actually recruit and retain employees if you put together sort of a healthy space in which you're occupying or really communicating that broader commitment to having a great place to work and having people return to the office. And then really a sort of a tenants and community side, really an opportunity through health and well-being certifications, commitment to human capital management to measure and demonstrate leadership, tenant engagement, support for local organizations, how you're bringing together the data that demonstrates that healthy buildings matter and are differentiators with how you then roll that up to your investors, to your tenants, and other stakeholders. So appreciate the chance to be here and look forward to the questions and continued conversation.
Great. Thank you guys so much. What a great conversation already. So I'm just flashing up here our contact information. I'll put it back up before we close out. But I am going to stop sharing my screen and jump into our panel. So the first question, and it actually dovetails, I think, pretty nicely with what Harry was just talking about, but we know that social impact is a really difficult thing to measure. And I'm curious, just sort of based on your varying perspectives, how do you think the built environment and interventions within the built environment could help inform metrics for this pillar more than it already has, based on sort of what Harry was talking about?
Who do you want to go first, Sarah?
I will. Well, you jumped in, so I will direct it to you, and then we can sort of pass through. I think this is one that all of you can touch on, just based on your varying areas of expertise.
Sure, absolutely. I mean, I think that this is the big question, right? And I would admit right up front that there isn't consensus on how to measure the S in ESG. So as one investor told us, it's the Wild West of the ESG landscape. But I think what is evident from what you've just seen, what we've been presenting, is that you can measure social impact. It's really how you define it that's in question. So there are many different ways to measure the impact of buildings on the and sites and larger projects on both the occupants of those buildings and the community at large. So there's no lack of metrics, there's no lack of ways to measure. It's really a lack of consensus on what will we choose to use as the metrics that define S. And I can't give you an answer to that. All I can tell you is that we are going to be working with the leading influencers in the industry, so those institutional investors that really are going to set the tone for ESG, to understand which of these metrics are the most critical, have the greatest material risk really to real estate. So I used to be a real estate developer, as many of you probably know. The two things that real estate development, the two key decision-making pieces in real estate is, how do I increase my return on investment and how do I mitigate my risk? And so we as a group and as a panel and as an industry really need to understand what role does health play in those two key decision-making areas? And we can obviously provide that data. So this is a big step forward by being able to say that there is a direct correlation between promoting the health of your occupants and the community at large and the tenant satisfaction and net promoter scores, which we already know as an industry directly correlate with financial performance. So I think that we're getting closer to that definition of the S. And I think, Harry, you also have a lot of you guys have really been defining it and getting to the point where we're going to come up with a few key metrics. It took, I think, about 10 years to come up with carbon. We'd like to do it a little faster for S. So I'd love to hear everyone else's opinions on what you think the key metrics will be as far as defining S. I think, Harry, you've also already made a lot of progress on this.
Yeah, and I think sort of building on that, the parallel from the human capital management side of so much of a focus in the great resignation, great reshuffle, whatever sort of buzzworthy way we're going to categorize what's happening in our society today. But the importance of attracting and retaining employees in the same way for real estate. It's about attracting and retaining tenants. That's really what it's all about, and being able to draw that line and show all the initiatives and effort that's put into creating healthy buildings and having spaces that are attractive to tenants and ultimately employees, and being able to have similar data that shows that relationship to, I want to work here, I want to be in this space, I think will be impactful. And I think the longer term challenge is getting real estate companies, corporates, other sectors to report on comparable data to make sure that we can tell who's actually doing a good job. I think that's always the challenge from the investor perspective, is to make sure that they really understand the metrics that are being reported, and how can you tell who really is a leader, and is this really an apples to apples comparison?
Sure.
Yeah,
Right.
and building off of that, one of the reasons why I shifted my lens from looking inside of the property to how the property is affecting its surroundings is because real estate is different from other assets in the sense that the location is what drives the value, to Joanna's point earlier. And if we know that the way that the project is designed and built and operated is having an effect on its surroundings, and that if our goal, if we think of ESG, if we think of the S and the G of ESG in a similar way to the way we think of the goal of the E, which is a global attempt to address climate change and environmental degradation, then we're not really only looking at the social and governance questions within the site. We're actually, I think this is what makes it so difficult to figure out how do we measure it, right? Because we're trying to say, okay, if there's going to be a social benefit associated with this project, there's a benefit to the occupant, and it's a little bit more defined to begin to try and figure out what's the financial benefit related to a social benefit to the occupant. From the investor's perspective, from a REIT, from a portfolio perspective, there's this other question that Joanna also brought up about risk, right? And so if this project is actually can demonstrate that it's providing tangible benefit to the neighborhood, that it's addressing a gap, whether it's associated with resilience to climate change, whether it's associated to a food desert, or the fact that it's a dangerous built environment for people to walk around. There are all these other public health measures that are being tracked at the neighborhood and community level, that individual buildings make a difference, but the individual building by itself is not going to change the entire built environment. So that's why I've started thinking about, in addition to continuing to refine and understand how do we connect benefits to the health of occupants and health outcomes and the rental rates, and that the discussion that's in the report for Fitwell. I think another way to also think about how do we define the social and governance piece of this is we're already measuring a lot of strategies that, if they're implemented in a strategic way, could have a positive ripple effect on the neighborhood, addressing some of the questions that are already in community health needs assessments, in questions around air pollution plans, and some of the social equity questions that are being addressed at the local level. If we can demonstrate to investors that what we're doing is providing tangible benefit on things that the neighborhood and the community have already defined as something they care about, that is providing value. And so one of the things that I've been working on recently is a proof of concept to demonstrate that if you do measure it, and you can then use those measurements to say reduce the risk that the community is going to stand in the way of the project being built, or you can use that value that you're providing to tap into climate funding at the community scale that normally an individual private developer couldn't tap into. Those are opportunities that are linked to the location and the population in that place that are providing the value. And to me, that's a beginning to try and understand, how do we define social and governance metrics for real estate in a similar way that we've defined it for environmental.
It's really, really interesting. I love that sort of flipping the narrative a little bit there. And one question, and I'll start with Adele here, because it kind of piggybacks on what you were just talking about. A lot of what you've talked about kind of involves some level of sharing data, kind of tapping into all of the data that's being collected currently. We know that we live in sort of the big data age. So I'd love to hear a little bit about your advice to today's attendees, folks who are within the real estate sector, when it comes to looking for partnerships or leveraging the data that they're collecting, but also tapping into other partnerships to be able to pair that with other partners.
Great. Yeah, thanks for asking that question. I feel like we have so much data available at the neighborhood scale, at the census tract scale, that it sort of can feel overwhelming. But one place to start is with your climate action plan. That's the local climate action plan. Usually it'll have, sometimes there's a separate one for resilience versus mitigation, but usually they've got strategies and vulnerability assessments. So you can look at the neighborhood scale and see, what are the vulnerabilities in your neighborhood? And sometimes neighborhood plans actually have gone to that level of analysis. The other place that I would begin looking is at the, what I mentioned before, that every community in the US is required to create every 3 years a community health needs assessment. It usually lives at the health department. Sometimes it is a coordinated effort between the health department and local hospitals. And a lot of the time it goes down to the neighborhood level. So if you can combine those two pieces of information together, then it gives you a way to start beginning to prioritize and understand what the actual needs are. And then of course, go talk to the people who are there, right? Many times more and more community groups are getting organized and using data to explain why it is that they say that they want a certain aspect of their, to a development, that this is why we want a grocery store here, or why we want a soccer field. And so listening to them and understanding how what they're saying could potentially be evidence-based and data-driven, and that you could partner with them. And I guess the last thing would be, just since I know that the Center for Active Design is based in New York City, a lot of cities have open data portals, and New York City's is amazing. And you can go in there and find all kinds of information that's very specific to your neighborhood, and use that to help you understand what the needs are that you would want to respond to.
No, that's super interesting. And it really seems like it's something that needs to be better ingrained in the process, because obviously this is something that forming those partnerships between the real estate sector and the public health sector, which is what we're all about, really can help ensure that it's not just adding another thing to people's list, but that this is something that is considered because of that bottom line impact. So thank you for that. And I want to ask a question that actually came in from our partners over at the CDC. Thank you, Liz. So in this question, I'm going to start with Harry, and then we'll rotate through everyone. But her question is, if a design team could do only one thing to improve ESG for their owner, what would that be?
I think building in as much as possible granular data at the tenant by tenant level. I think whether that's access to indoor air quality information or energy information, it's so much harder to separate that out later in an existing building. And if you can put that upfront in the design process, that'll be invaluable for the long term of the asset.
Great. Joanna, any thoughts on that?
I mean, yes to data, right? Please use the data to inform the design or the operation. Use the data that already exists in the form of the research which is obviously what Fitwell is about, right? To inform which design strategies, operational strategies you should be prioritizing, and then please gather the data as far as outcomes, because we want market transformation, folks. We want every single building to be aware of how it is impacting the health of the occupants and the community at large, and then for steps to be taken that are continuously making improvements to our built environment, because we're looking at public health. We're looking at how do you have the greatest impact on the greatest number of people. So one healthy building would be considered a failure as far as we're concerned, right? Every single building impacts the health of its occupant and the community that it lives in. So we therefore need to address every single building. So, how do we scale this? So I think what I would ask of a design team is to really be informed about the impact that they are having on the occupants and the community at large. So it's really one around education that I certainly wasn't trained as an architect. When I was trained as an architect, I was trained as one, but I certainly wasn't educated about the impact on health that the buildings that we were designing were having. So I think that there's a new wave of education that's happening within the real estate industry, the designers, the engineers, the owners, the investors, that is now going to be informed by health, which is exciting. Because there's now also demand for health, and we can demonstrate the financial benefit of prioritizing the health of people within buildings. I mean, it's a crazy idea that it's taken a pandemic for all of us in the real estate sector to actually focus on the people in the building. We've all been focusing on the buildings for the last, I don't know, half a century, at least, probably more. And we weren't thinking about the people in the building, or it wasn't our highest priority. And the idea that there is a value that can be derived from actually thinking and prioritizing their experience is such a no-brainer, and yet it's taken until now to really be able to demonstrate that there is a correlation. So I'm excited for design thinking to change, where we think about buildings as places to be optimized for people, as opposed to that we're optimizing the efficiency of the HVAC system. Why are we optimizing the efficiency of the HVAC system? So that it creates a more comfortable environment internally for the person, the people, and so that it has the least amount of impact, or even a positive impact, how about that, on the climate and the environment that it sits within. So I think a shift in focus to people will bring about all the other changes that we're looking for. So thank you, Liz, for the question.
Awesome.
Yeah, and I think I would just, sorry. I just to jump off of what Joanna just said, I would encourage people, when they think about ESG, to not think about it as three separate things. If you think about the example that I gave at the end of my presentation, particularly related to a cooling center that's maybe powered by a solar array, that is a way for the building to also open its doors to the community at their time of need. That's really bringing together all three of the parts of ESG. And I really think that as we begin to think about how do we create metrics for ESG that make sense for everybody in the industry, that we should try to streamline and not end up with 60 different metrics for each one of those categories. Because if there's anything we've learned as designers, it's that you don't build a building just to protect you from fire, and a separate building to protect you from heat, and another building to make sure you can walk to the park, right? We have to synthesize all of these health and environmental questions and equity questions into a single design. And I think that we have the ability to think about metrics in a similar way.
Great. And we just got another question in that I want to make sure we fit in. And this is from David Rubin. He was wondering, so COVID-19 was a driver for owners and developers needing a way to demonstrate their commitment to healthy buildings. As we move from a pandemic to an endemic stage of COVID, how do we ensure the momentum continues when it comes to health and sustainability within the real estate sector?
So I'd love to jump in here because I like to talk about value. And I think that the study that we just came out with is going to really solidify everybody's focus on promoting occupant health, because the real estate industry, what do we talk about? They have to increase return on investment, decrease risk. We have just demonstrated that by really thinking about the people within your building, you can do both of those things. So you can mitigate your risk around occupancy. We all just saw a huge retraction in the amount of occupancy certainly in commercial buildings. And then also increasing return on investment as far as tenant satisfaction. What we're hearing now, which is incredible, pre-COVID, health was really seen as a way to positively impact the value of real estate. And I think the way we're going to ensure health is still a topic of conversation post-COVID is that we have solidified the value of promoting health. Pre-COVID, the value was really seen as a potential upside, a positive, that you could charge more rent, you could positively differentiate your portfolio in a market, you could positively differentiate your asset from others because you are promoting health. What we now are hearing from institutional investors is that they now see health as a risk, which means that if you cannot demonstrate how you're promoting health as a baseline, you have the potential to lose money. You have the potential to not be able to retain your tenant, not be able to retain your talent if you're a company, and have stranded assets. So real estate that is no longer meeting the demands of the market, because the demands of the market is saying your building has to promote and protect my health as a baseline. So there's been a total shift in what individuals are demanding from where they work and where they live. And because that demand has changed, everybody has recognized that demand. So real estate investors are saying that the demand is being driven by individuals. Real estate developers are saying the demand for them is being driven by investors who are requiring ESG metrics from them and by their individual tenants and the individual employees within their buildings. So they're getting that demand from both sides. So being able to consistently demonstrate the value of promoting health is the thing that is going to ensure that health remains at the top of the priority list, because if you don't promote health, that is a risk, right? That's a material risk. It's a risk that's going to affect your value because of both ESG requirements as well as individual demand. So I think value will ensure that health remains a priority post-COVID. I would also say we have plenty of other epidemics that are going on, and we would continuously like to draw attention to the mental health crisis that the population is in. So yes, the pandemic that is COVID will come and go, hopefully, but the mental health crisis that we saw already, which was already at serious scale pre-COVID, has only continued to escalate during COVID and really shows no signs of mitigating. So how can we leverage our built environment to optimize our environments for to support optimum mental health isn't going anywhere. And there's a direct correlation between depressive symptoms and productivity, et cetera. So we can make a financial argument for why that's good for business also.
Great. Thank you, Joanna. Harry or Adele, anything to add?
Reporting and disclosure is not a one-off exercise. It's not sort of we've checked this box, now we're done. A continued focus from an investor perspective on year-over-year improvement and consistency. How do you sort of maintain that? How can you demonstrate, again, from the conversation around risk management, that you've mitigated a long-term risk? It's not what have you done in the last 1 to 2 years. How are you setting yourself up for the next 20 to 30 years? The life cycle of real assets. So, from a risk and opportunity perspective, you do need to, demonstrate the progress you're making year over year and still having that long-term orientation and commitment to continuous improvement and using the data and research in your day-to-day and adjusting as needed. And there's more information and technologies that are out there. So I think we're past the, is this going to stick or not? This is sort of an expectation, and how do you kind of go further and really communicate that you have that long-term view?
Yeah, I agree with everything Harry and Joanna said, and I've been hearing the same things from developers that they're getting more and more pressure from investors, both commercial and impact investors, asking them to demonstrate with metrics that what they're doing is benefiting the community. And then in addition to that, if they can use those metrics to increase value streams to their property, nobody's going to say no to that. But I would say the other thing that I would encourage people to do, if this is something that you care about, is to try and think about climate change as a health issue, because I think that that is a way to integrate lots of the health promoting strategies that we see in Fitwell and other tools into a business case that everybody's used to and knows how to sell. And it's the way to have that long-term risk mitigation that Harry talks about, and also address health, whether or not you are talking to somebody who is skeptical of health as being a value add.
All really, really great points. And with that, well, I want to thank Harry, Joanna, and Adele for joining today for today's panel and presentation, and to all of our attendees. Please feel free to find us at fitwell.org. You can follow us on LinkedIn or Twitter for any continued updates. And I hope everyone has a great rest of your week. Thank you for taking the time today.
Thank you all.